Hey everybody, it's Pete. How's it going? Got a new fancy setup here. I moved everything around. In today's video, we're going to talk about the stock market getting hit pre-market today, what that means with earnings reports coming out. Goldman Sachs just reported. So is a bear market crash here? Or are we just waiting to buy the dip? How did last week's trading plan unfold? It was absolutely textbook, picture perfect for what we talked about last Monday morning. And then Wednesday came around, some news came around, and the market took a hit. I think the biggest, most confusing part of last week's price action was the fact that we rallied Friday afternoon into the close, and stocks were just bought up hand over fist on Friday and threw everything out of whack. I was actually looking for the stock market to open lower today, but on a close lower on Friday. That's actually one of the biggest things that we discussed quite a bit is forecasting. Got to turn my phone off. Forecasting the next day's opening price based on the last 2 days worth of trading. So we actually have a lot to talk about today. So is the stock market starting to roll over and seeing a mini crash? Is the bear market here? Have interest rates and lower quantitative easing finally seen a spot to take hold? I don't know about that yet. I'm still looking for stocks to buy. It's really just a question of which stocks and where. We do have one sector that is on fire. I'm also going to take you behind the scenes to the swing trade journal for the week starting out today, and what I'm looking at for the week will kind of give you an inside peek on what's going on there. Stick around. We have a ton of stuff to talk about, and I think Franz is right also about the 10-year treasury yields. We're going to talk about that in a second as well. So stick around. We'll be right back. Okay, so thank you for joining me today. Obviously, everything that we discuss is for educational purposes only. It's for you to make that final decision. It's my mission to help you make better decisions. We got some big decisions going on today. First, we're actually going to take a look at Goldman Sachs, and you can see that they actually just reported earnings were down 2.5%, and that's kind of in line a little bit with the earnings that we had last week. But I'm actually going to I want to give you a link to follow and track the swing trade journal that I have every single night in our community. I write a journal for the next day of all of the different ideas that are going out in the stock market, when we should be buying, when we should be in cash, when we should be looking to build positions, when we might even be able to look at some sell-short opportunities, which we're actually looking at today. But I think most of the community looks at for stocks to buy. So is the stock market crash you're looking at right now an opportunity to buy, or should we be hands off right now and maybe a little bit more in short-term mode where maybe we're looking for just 2 or 3 day trades? Or maybe even day trades, and we're gonna analyze that. But first, I want to give you a link. This right here is the portfolio for the week, and more importantly, the ideas for the week. But I want to shoot down, and I'll give you this link in just a second. This is actually the part that I want to talk about because it's relevant to this morning and Goldman Sachs reporting today. So financial stocks are supposed to ignite the next wave of buying, but gave us fire and water. So exactly what does that mean? So last week, Wells Fargo opened higher and traded higher. Citigroup opened lower and traded higher. JP Morgan opened lower and traded lower. So what was supposed to ultimately be clarity from the financial stocks, and they would support the next wave of bullish price action in the market, we kind of got right up there and nothing. We didn't get the clarity we wanted. The one thing that the market does not like is indecision. And we got 3 different reactions in earnings last week from Wells Fargo, JP Morgan, and Citigroup. Today, Goldman Sachs opening up 2.5 points lower. It was actually down $11 at one point. We're waiting to see. We actually got a good question in our Discord community. And actually, you know what? I'm actually going to share that with you just to give you an idea of the type of help that we talk about. So Dustin actually this morning is a swing trader. We're facing, would it be smart today to wait the first 30 minutes? I think whether or not you're a swing trader or a day trader, right? Well, day traders, if you can make fast decisions, that's awesome. But my answer is I'm in cash coming into the day. No rush at the moment to buy. Absolutely waiting. So big dip futures. Let's actually take a look at the futures just to give some context here. Again, on what we're looking at. So I want to give full context. We're down 48. We're actually down further than that before. Bitcoin futures also taking a hit and resting right at a big support level. And if we actually pull this out and get into the continuous contract, you can see how hard we've been working the chart. Let me actually get this off the screen. and pull this out. So just to give some context, last week we talked about Bitcoin actually trading down, bearish order flow, looking for it to get out of this box. We said, and to be clear, this is where we get a little, somebody reading one page of the book and thinking that's the whole book. Last week we said, is Bitcoin bottoming? And we drew a scenario that if prices traded a certain way, then we would start to look for a certain profit target, which in this case, and I'll pull this up again, 52,400 would have been the upside target. But we've got to map out the whole thing. Remember, everything we do is about scripting out our stocks to buy, scripting out how we plan to manage them. We said if it breaks above, it gets out of that box, and we're establishing a new bullish order flow to the upside. If it doesn't while it's in the box, the only other thing that could happen is it breaks down, and right now it's still sitting in that box. So when I show you this picture, I want to make sure that you are learning both sides of the equation. If this happens, then I plan to do this. If this happens, then I plan to do this. If you're a smart trader and you know everything about technical analysis, but you can't get profitable, it's that other side of the equation where you're probably only planning one side. If this thing works out perfectly and goes in my favor, I can't wait to book profits, but you got to manage both sides. Okay, so I want to pull that up really quickly just so you have some context. And this is how we mapped it out. So here's the box right here in Bitcoin. Here's the top of the box. Here's the bottom of the box. So right now it's still stuck in the box, but it's not really looking too healthy. We have to assume that this level is going to hold this basically 40,500 right in that area. And you can see where we are right now. If it doesn't, a lot of people are talking about 30,000 as being the next level, which if we draw this out, this is really the bigger window that we're talking about right now, right down in that level. Now, here's the big thing with trading. And I think this is probably one of the most exciting parts about learning, that if you understand how and when to buy stocks, you got probably 75% of the battle down. The challenge is the trade management. The challenge is you're probably not kicking your losses out exactly when you should. You're probably not accepting the losses on the downside, and you're probably not understanding how and when to hold your winners. So if you have that 75% of it down, it's that I'm telling you for a fact, it's that last 25% that will make the difference between being frustrated and waking up every day saying, if there's money to be made in the stock market, I'm going to go and get it. It's what happens between entry and exit that makes you a trader. What happens prior to entry and exit is more chart reading, where you're just putting chart patterns together and determining whether or not you want to buy. Remember, chart reading and trading are two different skills. All right. So now what I want to do is I want to give you the link to this so that you can get an idea of everything. And we're going to go over this in a little bit more detail. So I'm going to pop this in there. Everybody should be able to see that link now in the chat right below. So depending on where you're watching this, if you're watching this on the replay, I'll post this in the description below. If you're watching in the chat, it's on the side there. I also want to talk about, because the market is rolling over right now, I want to talk about this. I want to talk about this as well. One of the reasons that we came up with this about a week and a half ago is we had a lot of good questions about what if the market starts to roll over? How do I manage hedging my positions? How do I protect the downside a little bit more, whether it's with options or stocks, depending on your own personal preference? But also, how do I get aggressively short if I understand short selling, if that's okay with you, if you understand that side of the trade? How do I do it in the context of some stocks going up, some stocks going down? How do I find those opportunities? And more importantly, how do I execute it? So remember, before we just said understanding what to look at and understanding how to make money is two completely different things. So you want to write that down. So the hedging strategy, this video is another YouTube video that we did. So you'll see the link in the description below this video. When you click on it, I think it's maybe like a 7-minute video. If you have any further follow-up questions about the hedging strategy video, leave a comment in the hedging strategy video underneath there, and I promise I'll get back to you. But this is something, it's a little bit of an advanced trading strategy, but something you probably want to at least wrap your head around, because we discussed the difference between how many shares is proper in a particular kind of environment, how to work those positions on the short side versus the long side, what happens when your short goes up versus your longs going down. It's a pretty interesting conversation, but it's an advanced strategy. So if you watch that video, the link's in the description, leave comments, and I promise you, I always get back to everybody, okay? So now we're going to work our way over into the journal. All right. So I want to pull that back up, and we're going to walk through actually what we're looking at this week. And I want to start right at the very top, because I think this is a part of trading that is really not discussed enough. Is the fact that last week, and if we go back out to the longer time frames, and I'm going to use the SPY as an example, and I'm going to be honest with you, the point that I'm about to make, if I had to put a number on it, I would say that 90% of stock traders, people buying and selling stocks, to actively managing your own account, 90% of people don't factor this in when they are judging their results, and don't factor it in when they are scripting out how they plan to trade. And that's what happens if the market is less than obvious. What does that mean for you? If the market's chopping back and forth, does that mean that you're hands off, like Dustin just asked the question before? Does that mean that you're looking to scalp, or not scalp, looking to trade both sides of the market, being buying and selling short at the same time? Does it mean you're still only looking to be a buyer, but you're probably going to pull back your position size, maybe adjust your profit targets? All of that has to go into the differences in the market conditions. So first I want to pull this up, and I just want to walk you through a big part of the coaching call that we had last night, which was this. And we really want to point out the difference between what it was like during this 5-week run, even into the first week of November, so October into November, and then this, what we've had here over since then. So we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks of back and forth. So you're on this call right now, 7:40 in the morning. Hopefully you're watching this video. Let's get 1 million people to watch it. If you find some value, please do me a favor, smash that like button and hit the subscribe button. The point that I want to make here, as a professional trader, as somebody who's been doing this for a long time, look, you obviously know here on YouTube that if I've never met you before, I can't and won't tell anybody you should buy this. However, I will point you in directions of what great ideas look like. That's really my goal. My goal is to help you identify, if you understand what perfect looks like, then immediately in your mind, you need to understand and spot when less than perfect is available, and what that means for trading. What does that mean for position size? What does that mean if you should even be in a position at all? So the point that I want to make here, and this is the part right here. Let me bring this up and bring it in a little bit bigger. If the market has you confused right now, you're not alone. Vicious week of back and forth price action in sync with the previous 7 weeks, really a little bit longer than that on 7 weeks, right? After a healthy short covering rally, which again, let's talk about that. We absolutely nailed this last week. If you've been watching our channel and you were with us last week, we were so deliberate with the market opening last week and what we were looking for. We had 2 price levels that we were looking for. The first one was Monday's opening price. The second one was, could the markets get back above the 50-period moving average and hold it? And we said, if that happens over Monday and Tuesday, you can have a lot of conviction looking to be a buyer of stock. But what was interesting is we talked about that prior to the market opening on Monday. And then as the market unfolded on Monday and Tuesday, it literally unfolded exactly as we game planned it. So here's the thing. Whether or not Wednesday, Thursday, and Friday was challenging, Monday and Tuesday did exactly what we scripted. So these are the parts of your trading where, if we talk about, is the market confusing? Are you getting your head beat in? And has it been challenging, to say the least? Here's the thing, right? I have it here. It's super easy to look back after the fact and all that kind of stuff, right? But then we also do have a breakdown of where we are seeing opportunities. So again, talking about OVV and a bunch of other ones. The main point that I want to get across here, and you can see the breakout level that we're looking at here, it's actually basically flat here, but one of the ideas we're going to be looking at today. Here's the thing. Real trading, not the garbage where people are simulating and never have traded before, or somebody's probably like 20 years old, never actually put a trade on in the market, maybe hasn't traded for more than a month. Real trading, the trading where you're in control of the outcome, the trading that, whether it's inflation, high interest rates, low interest rates, all of those things in the equation, real trading requires you paying attention. It requires you understanding when you should be stepping on the gas, holding winners, squeezing out every last piece. And if the market's a little bit less obvious, then you need to go deeper into sector rotation. You need to go into, where is the market seeing money flow right now? And again, if we get into, this is why I wanted to give you the journal this week, we're paying attention again to energy stocks. Energy stocks continue traveling higher, and we'll just pull up the XLE to give you an idea of some other ideas. And you can see this is where we are right now. Okay, even CVX, we'll go over a bunch of them. You can see where there's a really clean pause here, and we're heading into some other levels, and we're following through. So the point that I'm getting across here, and we'll continue to go over this. I want to explain. I want to give you deeper context to what we're looking at here. Is I'm not going to be foolish enough to say there's always a bull market. I understand somebody says that. The guy has years and years and years of credibility. I'm not going to say there's always a bull market, but there are always opportunities to be a buyer. Now, those opportunities need context. Do you have this big wave of selling coming in and smashing every stock and there's little pockets? Yes, that has happened recently. Are we in a full-fledged bear market right now? Absolutely not. Last week, again, putting it in context, last week, 2 weeks ago, we made new all-time highs. So we're not that far away from new all-time highs. And is Jim Cramer right when he says that we're going to find an opportunity, we're going to find bull market somewhere? Yes. However, the thing that I want you to be thinking about as a trader is that you need to put those bullish opportunities in context of the big picture. So in other words, how much money is flowing into just that sector, the industry group? Is it technology or just semiconductor stocks? That kind of thing, right? When you do that, what's critical in your trading, if you want to last, if you're like most traders where you're only looking for buying opportunities, it's incredibly important to understand how the big picture should influence your position sizing. Whether or not it's an amazing market or not, but especially in tougher market conditions, it is very important to understand that when the market is less than perfect, it's imperative that you work your way into positions because the big picture is seeing more selling than not. So even with the XLE and all of these energy stocks we're looking at, and even to a little lesser extent, basic materials and industrial stocks, working your way into positions is the smarter trade right now. I just can't get that across strongly enough, mostly because the conditions have changed. The story has changed. Quantitative easing is subsiding. Interest rates are going to be raised. So what does that mean? Well, we're seeing basic materials rally. We're seeing industrial stocks rally. We're seeing energy stocks rallying, and should be seeing, if earnings come out a little bit better, on the financial stocks. So we're seeing a little bit of a hit in financials right now. Wells Fargo rallied. Citigroup opened lower, rallied. Goldman and JP Morgan took a hit. Morgan Stanley came close to an all-time breakout and didn't hold. And we'll just pull up that one really quick just to give you some context. Let me pull that one up and go over here. You can see Morgan Stanley actually punched up and did not follow through, right? So what does that mean? What does that mean for you? If you love to trade Apple, if you love to trade Tesla, if you love to trade electric vehicle stocks, if you love to trade technology stocks are going to have a hard time catching their footing right now with the specter of interest rates rising. So you as a professional, and I'm not saying you quit your job. If you did and you're profitable, awesome, welcome to the community. But it's not for everybody, okay? What is for everybody is understanding that just because you liked Apple 6 months ago and it was ripping to new highs and it became a new $3 trillion company in that moment in time, or Microsoft, or Meta platforms and whatnot, times change, circumstances change from one quarter to the next. You'd love to be able to see market leadership. So if we actually work our way across that as well, and you start to see the market leadership, and obviously these are the earnings coming in, you start to see rotation, and the rotation turns around, right? Consumer cyclical, that was on fire. That was all of the electric vehicle stocks. The variant exploding through the universe right now. So healthcare have a really strong bid. They are actually taking a hit. Now, this is what is required on a day-by-day and week-by-week basis. Now, whether or not you do it in as much detail as I do for our community every night, that's okay. Everybody has different time frames that they're buying stocks, different time frames that you're reading the stock market and determining how long you want to buy a stock and hold it. However, what is important, if you want that upside, you want that, without sounding like an infomercial, if you want that financial freedom that we all know that some side hustle, stock market, real estate, whatever it happens to be, crypto, you need to put in a little bit of extra work to be prepared to make money. And when you put in that little bit extra work, here's really the thing that I want to get across before we get into that spreadsheet and talk about some ideas for today. Think about what I said at the beginning of today's call, which is you understand chart reading, and that's 75% of the way there. The other 25% of the way there is understanding how to be a trader. That's understanding what happens between entry and exit. That's understanding how and when to buy stocks. But here's the big thing. Let's say that you've conquered getting out of losing trades. You're like, all right, learned it online, learned it from Pete. I hope you learned it from me that a trading loss is nothing more than a business expense. You got that side of the trade down. You're okay. I'm out. That thing didn't work out. No emotional attachment to it. Now I'm just, what did I teach you? Go to look for the next trade. Where are you going to make it back on the next one, right? Here's where doing the little bit of extra game planning. I'm just going to show you this again one more time. I gave everybody the link. This is just the thought process coming into Monday. Okay, this is just the ideas, the breakout levels. You can see DD we're looking at here at a breakout of 86. Can it get above that level? And you can see why it's such a significant level. I'm going to bring up a really big point right now, and it could make or break whether or not hopefully you're watching this, and hopefully you take a lot of what we say to heart, right? It's not the losing trades that are holding you back. It's two things. It's number one, over trading because you don't understand how to script things out like I'm showing you in that trading journal. And number two is that you don't understand the conditions and the circumstances to hold winning trades longer, okay? And that comes from doing the game planning. That comes from spending an extra 30 minutes a day. Yes, you need to put it on your calendar and say, if I want to make money this week, if I want to have that feeling of understanding what's going on in the market, that feeling comes from doing a little bit extra work. Does that mean you have to sort through all 12 stocks and the major ETFs? You bet your bottom dollar it does. It absolutely does. It means that you need to go on a treasure hunt every day. And then that process, that habit that you build, you start to earn the right to see more distinctions. You start to earn the right to see opportunities that you didn't see before. You start to, and I hate to use this word, but you get this feeling where you understand what's going on in the big picture. And that feeling is backed up because you did the work. So I want to make that clear. I'm not talking about some like feeling that comes out of the air. I'm talking about the feeling that comes with experience, that you'll understand how and when to be in cash, how and when to trade for quicker profits, and how and when that everything here is lining up and I should be looking to hold this thing a little bit more. And those are the trades where you capture a little bit bigger profits. Instead of 3-to-1 or 4-to-1 on your risk, maybe you make 7, 8, or even more than that to 1. And that pays for all those pesky losses that you're understanding are nothing more than a part of the business. So I'm saying this for a couple of reasons that I want you to learn this from me. But number two, I have scaled back my swing trades dramatically over the last 6 weeks, 7 weeks, because the picture just hasn't really been that obvious. And I've been trading, I've been putting on trades, but just not at the same pace that I was heading into the end of October because the market conditions are a little bit less obvious. So I want to give you this experience that I've gotten, that I've been in your shoes if you're confused right now and feeling like you lost all of your ability to pick stocks. Sometimes it's the market, and when the market gets a little bit less obvious, then you got to shift over and you got to work a little bit harder. We call it in our community, you got to put on your overalls and just do a little bit of extra work. Hopefully we're giving you a lot of value in these videos where I'm showing you how and when to buy stocks and giving you ideas of how to identify what perfect looks like, and then you work it down into the stocks that meet your resources. So I just wanted to bring that up because a lot of people are really confused right now, feeling like they've lost their confidence. And sometimes you just need to take a step back and say, wow, I have been looking at the market right, but maybe the last thing I needed to do was adjust my position sizing because the market got tougher. And on those trades that didn't follow through, it was a much smaller loss than regular because the reward potential was reduced a little bit. So that means that the risk going into the idea into buying that stock should have been a little bit less. And like I said before, that doesn't mean you can't build up to a better position. That's when you want feedback on the idea. You get feedback, and as it starts to move in your favor, like we're seeing in the energy stocks right now, those are the ideas that you can get a little bit more share size because you're getting that feedback. So I just want to continue to work our way down the journal. I gave everybody the link, so you have plenty of ideas heading into today. Basic materials, as you saw, worked its way up towards the second spot in the list here this week. Alcoa has been the one that's been looking the best on the scans at the end of the day, but really hasn't given us that many awesome swing trade opportunities. DD, however, at this breakout level, that's the big level we're going to be looking at today. Other stocks in this area, FCX, LYB, show promise. Newmont attempted to hold the bid after previous bullish run over 60. So I just want to pull up that Newmont because we were watching that one over here. It really woke up here on some big volume. We had this breakout level. This pause right here was really one that we were looking to lean on. Once it broke out of this bullish pause over 62, we had plenty of room to go. Maybe some minor resistance here, but it didn't happen, so we didn't get involved, which actually that's another question that I get asked all the time, is if you like it above that level, why don't you buy it now? 95% of the ideas that I buy, 95% of them, I want them already moving in my favor, which means that I personally go in with a buy stop. So in other words, if it's trading here and there's a bunch of selling here, and I'm going to show you Qualcomm in a second, why would I get involved if that's the right price? I want to see buyers step up in a way where they finally punch it through that price and we're riding that momentum through that level. So if we work our way a little further into the sheet here, Qualcomm is a good example of that right now. Poised for new levels if then it can finally punch through that. So if it finally punches through, then I'm looking for an entry above the 190 level, but I'm not going to fight that window right now, okay? Financial stocks we just covered. We also talked about Goldman Sachs coming out this morning and down $14 now. So it's actually accelerating to the downside right now. So this is a big part of what you need to do every morning before the market's opening. Futures are actually not as bad. They were actually lower than that before, which is interesting. They were down 50 and change before. So Goldman's going down and the futures are actually catching a little bit of a bid. So keeping to put the pieces together. As of for the financial stocks last week, these are the two that are at the top of my list right now because they held the bid. And just to give you an idea of what that means, specifically on the daily charts, Wells Fargo was actually strong pre-market on Friday. You can see it's actually flat, which is actually showing relative strength and actually followed through. Citigroup opened lower, and we were mostly interested. We had a 1, 2, 3 bottom here, push and a pause, a push and a pause, a push, and then earnings. But what's super interesting is the rally off of earnings and how it closed relative to the market on Friday as well. Relative strength after a bearish gap down. So Wells Fargo and JP Morgan are on the list this morning. Wells Fargo and Citigroup. JP Morgan is not. Absolutely not. It followed through and it's trading to the downside again. So the conversation around this, which is pretty interesting, is how do banks make money? When interest rates are stuck at zero, they don't have any reason to do it. At that point, there's no margin for them to be making any money. But as interest rates go up, that margin for them spreads a little bit and they have a wider opportunity to be loaning money and making more on that. That's what we're looking for. So as interest rates go, we're looking for them to find a bid. The way we talk about it in our community, we're looking for them to hold a bid. So as of right now, the only stocks that are holding the bid right now in the financials that we're seeing as of this moment is Citigroup and Wells Fargo. Those are the two that are going to be near the top of my list right now, okay? So working our way and continuing to work our way through this, through the game plan from yesterday. So there's the bullish reversal that we just discussed and holding the bid. Scoping the EV stocks. Again, like I said, everybody loves to look at these stocks. As of right now, Ford and XPEV are showing the most relative strength. Tesla, as much as everybody loves to keep an eye on Tesla, look, I love it too, but it's smack in the middle of this trading range. If we zoom out to the weekly chart, similar to what we looked at in the SPY, that is anything but obvious. Again, if you need to know what obvious looks like, that's what obvious looks like. That is not obvious. So in the EV area right now, Ford finally got out of this and is now creeping higher. And XPEV, as we mentioned, $10 rally off the low from Monday, from here to here, almost $10. Really what we're looking at right now in XPEV is I want to see it get above 50. Holding above 50 this week would be a big deal. So you can see now we're down at 48.72. So I want to make this clear. This is what you should be striving to do, as well as I don't want to be taken out of context. I did not say and script or game plan out, I'm buying XPEV as soon as the market opens. I said above $50, the level has been having a hard time holding, if it's above $50 and coming off of last week's $10 rally off of Monday's low, and the fact that it's showing relative strength over the last week or so to the rest of the market, the rest of that industry group, then I plan to look at it over 50. So all of those pieces have to go into the trade. All right. I'll post this link to this swing trade journal below. If you happen to be watching this video later, or you just want to get the link again, I'll post it in the description. Okay. So working a little bit deeper in here. All right. Forward, this is the weekly chart. You can see nice breakout, pause, and taking off again. This is a big story from last week. If you didn't happen to see the news, Macau licensing regulations, taxation, all of that changed. So we're going to take a look at, and you can see LVS here on the chart. So now we got to talk about what this means. What does this mean? Everything we talk about is order flow and tape reading. It has to be obvious. Hop on board where buyers have been doing something a little bit longer term, right? LVS, Ford, and Win do not exhibit that. So now we're shifting into a different catalyst for a trading idea where LVS, Win, and MGM out of Macau had a big change in one of the reasons that those stocks were getting pummeled. Is that an idea today? Yes, 100%. Is that an idea with level 10 conviction, 10 out of 10? No. It's an idea to consider because the story changed. The same reason the story changed in financial stocks with interest rates changing. The same reason the story's changing in technology stocks with quantitative easing, and the opposite of the effect most likely to happen to financial stocks is technology stocks are likely to not really love the fact that interest rates and the specter of higher interest rates are coming around. So we need, as a community, both here on social media, but if you want to take it a step further, obviously I'd love to see you in the boot camp. We need to be going over some of these ideas and whether or not the story is still valid. So the story, the catalyst in LVS, Win, and MGM is that news story. And actually, we'll pull it up really quick in case you didn't happen to see it. We'll just go here. We'll pull up the story. This is from last week. We talked about it last week. Changes. There's a lot of changes going on in licensing, regulation, and taxation. So these stocks are going to be in my game plan today looking for follow-through. So they're relatively neutral right now. Again, relatively neutral compared to the market. MGM did not follow through in the same way that the others did. You can see it's down a little bit. So I'm game planning for these casino stocks to hold a bid because of this positive catalyst. If they do start working a position, if it follows through, great, we'll look to add. If it doesn't, we'll have less share size. The other side of the market, and we'll stay in the gambling area, are the DraftKings, the Penn, and a couple of other stocks that are actually in bearish order flow right now and actually setting up as short sell candidates today simply because of where they are, broke key support levels where buyers came in last time. And I'm going to walk you through those ideas right now on the other side of the tape, assuming that you're okay and understand how to short sell stocks. So in these ideas, we're actually going to be taking a look at GameStop. A lot of these stocks might not be easy to borrow. So when you log into your trading platform, you might see something that says HB, which means hard to borrow. And that simply means that your broker-dealer, which is very common, by the way, does not have the stock available for you to borrow to short sell if the stock goes down and be profitable on that if you short sell it and it goes down. So just be aware of that if for any of the ideas we're about to talk about. Again, everything we talk about here is for educational purposes. You have to make the final decision. Short selling is an advanced topic that a lot of people don't understand. But now I'm speaking to a lot of other people that are advanced traders and understand short selling. We just talked about the positive catalyst in the casino stocks in Macau. We're going to take a look at the other side of the market in those kind of stocks. So GME, obviously not a gambling stock. We're going to take a look at that. We'll get to a couple of them in a second. So you can see here, GME broke this support and has quite a bit of room to go to the downside if the selling continues all the way down in the, gosh, it's almost $60 below here. AMC, same exact thing, coming down and teetering on a breakdown level. Getting back into some of the, what you might call gambling stocks, Penn National Gaming is now down almost $100, maybe even a little, very close to $100 from here. And you can see it's got plenty of room to go to the downside. DraftKings as well. Square, which is now Block, and Chewy, and Zoom. And I think I want to talk about Zoom here because I actually brought it up over here. I'm going to work our way down to the bottom here. You can see the rest of the ideas. This is actually what I want to talk about here. And I want to finish up on this because I really want to wake up everybody with some stop losses and that kind of stuff. Zoom is now down $430 since its pandemic high of $589. So here's the question that I want to leave you with. Do you still believe trading with the stop loss is a good idea? Do you still believe that averaging down into a bad position is a good idea? This is reality. Okay. This is reality. Get a lot of traders that see the blip and they're like, everything is good. Here's what I want to get across. Okay. You're probably watching this because you're pretty darn smart. You're probably watching this because you're working your tail off in your spare time and you really want to make trading work for you. Every single veteran trader that I have ever met, including myself, you have to understand that managing the downside is your first priority. And then you're looking for a head start on winning trades. As they start to work out, then you understand the conditions for how and when to either add to those positions or simply hold them looking for bigger profits. If today's video had a theme, that theme would have to be, what's the current story? Is the story order flow? Is the story news? Is there a bigger picture story such as interest rates and quantitative easing? What is the obvious story right now that we are looking to build an argument for to choose to accept risk? Everything we talked about today is we're now looking at both sides of the market. There's opportunities long and short and probably hedging as well. And that hedging video is below the description. The single biggest piece of experience I can give you is that if you're working hard and you really want to make trading work for you, it's imperative that you, before you put the trade on, you say, okay, I am okay with accepting this risk. But if the trade doesn't work out, I have a plan where to get out and then a plan what to do after I get out. So in other words, this is, again, taking it a step further. If you get out, what circumstances would line up for you to get right back into that same idea, which is very common, quite honestly, for active trading. And maybe not in that same stock, but maybe another stock in that industry that might be showing a little bit relative strength. Here's the thing, and I don't make promises because we're on social media. I've met a lot of you, not all of you. It's up to you to understand that if you want to have that grip on turning your trading account into really nice monthly and quarterly cash flow for yourself, you have to manage your expenses in trading. And the biggest expense you're going to have is the downside of trades that don't work out. I've purposely shown this Zoom trade because I know a lot of people, unfortunately, that got stuck and they're claiming they got stuck in a position that wasn't working out, and you didn't get stuck. You just chose not to get out. You had fear of missing out because you thought the stock was going to turn around as soon as you got out and you're going to miss out on those profits. For those of you that started trading after the pandemic started and you just got involved after that monster move to the downside and you saw nothing but 18 months of a really amazing bullish rally to the upside, I want to be clear, and somebody just asked, is a crush coming? I am not saying the market's going to get crushed. What I am saying is the reason we had that vicious bullish move to the upside with very few pullbacks, that story has changed. We've turned the chapter from that story. Now, us as friends, we have to start interpreting different stories and how we're going to trade the current market conditions. There's going to be plenty of opportunity. It's going to be different opportunity. It's going to mean we're going to have to dig a little bit deeper into the sector rotation like I show you here every day. Okay, so when we talk about this kind of stuff and we work our way through the sector rotation, it's going to change. We're going to pay attention to earnings and how those earnings are going to be affected. We're going to take a look at what different stocks are at the top of the list and what industry groups they're in. And then we're going to work our way into figuring out which of these industry groups have the most opportunities and how do we drive a little bit deeper into those opportunities. These little things add up to you having massive confidence in knowing what you look at. And then the next step is understanding how to go from chart reader to understanding that last 25% as a trader. So is the bear here? Is the big bear market coming? Is the stock market going to crash right now? Look, nobody knows that. Absolutely nobody. Anybody who tells you they know exactly what's going to happen next, they're lying. Nobody knows exactly what's going to happen next. However, if we do our job of doing the game planning, if we do our job of scanning, if we do our job looking at the market, sector rotation, industry groups, there's a pretty darn good chance that we're going to find some opportunities to be buyers of stocks And those kind of opportunities are going to unfold pretty much on a regular basis. It's really just a question of, are we doing the work to uncover those opportunities as a group of traders? So hopefully you have that sheet. I posted that sheet. As soon as this video is over, I'll post it below again. Actually, you know what? Let me give it to everybody again right now because I want you to have it. I'm going to pull that up. So I want you to go into this and think through how much detail I put into these ideas and whether or not you're putting in that same amount of work to determine whether or not you should be buying stocks, what levels you should be buying stocks, how close you are to perfect, how far away from you are to perfect, and how that affects your position sizing and your profit targets. I have to head over to our other meeting. We ran a little bit long today. I want to thank everybody for joining me here today. It really means a lot to me. I hope that I'm providing massive value for you because that's my intention. If you do get value out of these videos, please do me a favor, smash that like button, hit subscribe, and do me a favor, share the video with your friends. If you think it's valuable and you got some friends that would find this stuff valuable, please do me a favor, share it. I'd really appreciate it. All right. Have an awesome day, everybody. I will speak to you soon. Thank you so much.